So April has been a wild ride for mortgage rates, for the bond market, for the stock market, with tariffs, all the news that's been hitting the market. Well, some buyers have taken advantage of that chaos and got a lot of offers accepted this month. We've had a very active housing market this month in our market. We've also had a lot of people kind of waiting for that next big move. And we're starting to see some good moves in the bond market and some calming in the bond market, and rates starting to move lower a little bit. And a lot of that is kind of what to expect moving forward. And we're kind of getting to a point where we have a lot of data this week that the market's going to be looking to see when the Fed is going to possibly start lowering rates. And that data starts tomorrow with PCE data. That's the Fed main gauge of inflation. That comes out tomorrow. And then we have the unemployment report on Friday. Those two numbers could be big market movers for where we go from here. We're now trading at some really good levels, and we're going to start looking at when the first Fed rate cut would be, maybe June. But this is the thing to remember, and the reason why I wanted to make this video. Anytime that the market starts to move, it moves well before the Fed actually cuts rate. By the time the Fed cuts rates, that's when the market tends to reverse a little bit or reevaluate. The market is always way ahead of where the Fed is, and the market's going to position itself way before the Fed. The market, and I would say the bond market, is kind of in control right now. All the moves that they're making is causing reactions in tariff news, stock market volatility, administration changes, and Fed communications when they're doing interviews. So the bond market's in control, and the bond market will start moving well before the Fed ever lowers interest rates. So you have to be prepared. Again, timing the market right now is very difficult. We're seeing a lot of people make some really bad mistakes. We've had some people contact us that were with other lenders that did not lock their rate, and the rates ended up being higher. So you got to be very strategic. You have to be very careful in this market, and you have to try to take advantage of the ebbs and flows of the market. When rates are moving higher, that may be temporary. You're going to have these moments where rates are not just going to go down in a straight line. You're going to have times where rates are moving higher, and you're also going to have times when we have these big moves lower, but they don't last long right now. So the move lower is going to feel very different than it has in previous markets because there's so much other volatility and things that are affecting how rates move lower. So strategy right now as we head into May is going to be, if rates start to come down, the market is going to get more and more competitive because we have less homes for sale than we did in 2019. To put it exactly in Illinois, we're 74% below where we were in 2019. I say this stat all the time because it gives you an idea just how low inventory is and what you need to do to be competitive in this market. So as you move forward, as you enter this week, keep in mind that this volatility and the back and forth will really set us up to where we be in May. And if the numbers support a Fed rate cut, we're going to be off to the races, and May is going to really kick off. And we're going to be looking at a much different market, especially if tariffs start to get negotiated. If we have countries coming to the table and we start seeing some resolution in some different countries, and even a China resolution with Trump, that would be massive news for the market. That would move the market dramatically. So a lot to come down the way here, especially this week. Wednesday and Friday, the two big days. So we'll have an update for you by the end of the week. If you have any questions, feel free to reach out.